Hello, my name is Tendai and welcome to my YouTube channel where we talk about dancing, video editing and many other exciting topics. So myself, I've been running my side hustles for the past 2 years here in St. John's, Canada. And a big part of your success as a business person is getting a better understanding of tax and using some of the benefits that you have through your business expenses to help your business to succeed even more. Nothing excites me as much as when I see other people starting their own side hustles, because there's so many benefits you get from owning your own business. So I actually looked this up the other day from the Canada revenue agents. They'll define as a business as anything, be it a profession, a trade, or anything that you do with the intention of making profit, or there's an expectation that you'd make profit at the end of the day. So this counts all of your side hustles. Technically, you can call them as you get business. Be it you're teaching people other things, be it you're selling something. At the end of the day, from CRA's perspective, it is a business. So the first choice that you have is whether you incorporate or whether you don't incorporate. So there's benefits to both ways that you choose from them. So if you choose to incorporate, it just means your business exists as a separate legal entity from you. So if someone was to sue you for something, or if you were to get in trouble for anything and your business has to pay, you won't be liable personally. Your assets will be protected that way. And then if you choose not to incorporate, just means your assets in your business, they are the same thing. So if you get in any trouble, it means you're personally liable. But then there's accounting benefits to not incorporating when it comes to your taxes at the end of the day. The first big thing that makes the process of going through your taxes very difficult is just because tax law is fairly complicated, because they might have things set for this year and people always find a way around regulations. So they have to come up with things to protect the loopholes that people have found. And by just going through that cycle, it just becomes more complicated, it just becomes more difficult. But if you actually take the time to learn all those things, so the things that I'm talking about, I've learned them over the past 2-3 years. And you can go through the Canada Revenue website, or to visit any tax professional, any accountant, they would help you with these things. So after you've decided whether you're choosing to incorporate or whether you're choosing not to incorporate, as you are running your business, as you are running your side hustles, you need to find a way to keep track of your income and your expenses. So myself, I do it through a simple Excel sheet. I have all the things that I do for my calendar year. So you still have that flexibility. Your calendar year could be the same as the actual year. It's up to you how you decide to do that from there. But after you set up your income and your expenses, so you want to split this into 2 parts. So the first part is just depending on your activities that you do. So for myself, I teach people dance classes. Some people will do private classes. Sometimes we do events. We also do activities through the community. So there I would break it down by each activity that we do, and just keep it simple to have your income on one side and then you have your expenses on one other side. So then there's other expenses that you need to run your business. So this is where the benefit comes of keeping track of your expenses, because that way you can submit a claim to the government at the end of the year. So essentially what you're trying to do there, so after you've gone through the first step of keeping track of your income and your expenses, so the way CRA sets this up, it sets it into different distinctions. So there's different groups when it comes to your incomes and your expenses that you'd submit at the end of the year. So some of them, they are fairly simple to follow. So that would be your advertising, that would be your music and your entertainment, that would be your rent, that would be your travel expense. So essentially anything that you do is a business expense at the end of the day. But then there's some areas where there's room for creativity, and people might not realize this all the time. So that's what I would want you to get out of this video. So as you know, every business, when you're starting up, you're still trying to build the trust. So you have to do some investment, you have to do something. So I give my example for myself where I teach people dance classes. I have to learn the dance, so I have to invest in courses. Sometimes I have to go learn from other people. So that's an expense. That's the things that I need to for my business to succeed in future. So that is different depending on what you do. So as long as you keep track of this, when it comes to you at the end of the year, you now have the room to claim these things. So the first part is there's a section where they call the rent. So usually when you're trying to do something, you're still getting a feel of, is this going to work? So sometimes you might not necessarily need to invest in getting the things that you need. So I'll give an example for myself where we do events. Sometimes I might need to get a bigger speaker. So for me at the start, there's not really much gain in getting a bigger sound system, because I don't know whether it's going to work or not. So I'll rent a speaker system. So that is different depending on what you do. So you might need to rent a car for your operations. You might need to rent space to do a certain thing, to do an event there. So at the end of the day, yeah, this would fall under your expenses for rent. So like I said, there's also your accounting at the end of the day. So your accounting, you can do it yourself, or you might need someone to do it. So that will be under your accounting and your licenses. So as long as you keep track of this, when it comes to tax year, when it comes to the end of the year, you just submit your expenses and that will be deducted against your income and you get a tax credit for that. So one thing that I forgot to mention at the start, so the reason why people choose to incorporate or not to incorporate. So if you incorporate, you'll be taxed your income will be taxed at a lower rate, and if you choose not to incorporate, your income will be taxed at a higher rate, but then you use some of your expenses from your operations to offset that tax, so that you might get a tax return at the end of the day. So let's say you're making 10,000 from your business per year, and then you're taxed about 50% if you're not incorporated. So that means you have to pay in an additional 5,000. So that means you have to, instead of paying in that 5,000, you'd use your business expenses to offset that 5,000. So let's say if your expenses for your business account to 6,000, you get 1,000 at the end of the day as your tax return. So two areas that there's really room for creativity. So there's many layers to taxes. So I can't talk about everything in this video, but the two ones that I'm trying to focus on are, so the first one will be your startup costs. So there's startup involved in every business, and sometimes that startup affects your income. So at the end of the year, once you have kept track of your startup expenses, you would put them in your column. So you'd bring them from that division between your income and expenditure. And whatever you think you needed to do for your startup, you'd bring up under your startup costs. And then one really area that people might not always be fully take advantage of. So there's a section which they define as supplies. So your supplies, as your business owner, or even if you're getting someone to do your taxes at the end of the day, there's just a bit of value in knowing a bit of how the taxes are broken down. So when it comes to your supplies, so myself, I give an example where I said I teach people dance. Sometimes we have to do performances, so I might have to get outfits, I might need to get dancing shoes, might need to get a camera, might need to get software to edit the videos afterwards. So all those things, those are the supplies that apply to me. And these supplies, they are different depending on what you do. So that's where the advantage really comes at the end of the day. So as long as you have your supplies clearly defined, so instead of some of those supplies, they might contribute this year towards your operation for your business, they help you succeed, and they might cut down on your profits this year, but when it comes to tax time, you put them as a business expense and you get some of that money back as a tax return. So the last two that I'll talk about, so there's music and entertainment. Sometimes you have to travel, and sometimes you might have to treat some of your customers, or as part of your business you have to get meals at some point. So that as long as you keep track of that receipt, that would go under your section for meal and expenses. So the one really last one that I saved for the last for the end. But before I talk about that, so sometimes some people do their taxes on their own. Some people, they get someone to do them. But as a business owner, you don't have to do everything by yourself. So there's options there's option to get other people to do some of these things, and there's many amazing websites like Fiverr. So I have a link in the description below. Fiverr, you can get so many other services, be it video editing, video accounting services, and you don't have to do everything for yourself, because at the end of the day, you do for your business to benefit you, but you don't want your business to be your life. There's more to life than your business. So the last one that I saved for the end. So since the government knows that there's startup costs to starting a business, and you might make losses at the start. So if you're a side hustle and you're working elsewhere, the losses that you make from your business, there's actually opportunity to claim some of those losses against your taxes. But then you can't go on forever. making losses. So as a business, there's an expectation that you make profit at some point. So I think you're supposed to be defined as a business, you're supposed to make profit 2 years out of every 5 years. So any losses that you make in the other 3 years, so your losses, you'd find it from your difference between your income and your expenditure. And these losses, you submit it as a separate item at the end of the year. And then these losses, they'll be taken off against your income from your other job. So I know most people, they start their side hustles as an additional income. So you're already making income from your other employment, so your main hustle. So your loss from your side hustle, you claim it against your income, your taxable income from your main hustle. And that's one of the biggest benefits of businesses in Canada. Because what happens is, through your business and your side hustle, you're generating income, but there's expenses that come from your business. Usually you get more expenses at the start and you start generating more profit at the end of the day. So to help you go through that hump at the initial start, what the government tries to do in Canada here, they try to help you to be able to give you that ability to be able to claim your losses from your side hustle against your main income. And the more income you make, it just means the more losses you can claim. And eventually, with those investments that you're making through your business, they'll start generating more profit in future. And you only have to claim this loss, but you'll only be claiming your business expenses, be it your meals, entertainment, your licenses, whatever supplies you need. And that's how you benefit. That's how you might get the extra income for your vacation, to get something that you might like. So there's only so much that I can talk about in this video, but I have 2 exciting things that are coming up. So there's going to be a course through Fiverr. I'll publish more information about the course later on. But what happens in this course, it will actually take you all the things that you need to know about your taxes, the process that you'd go about keeping track of your income and your expenditure, and how you'd go through filing your expenses at the end of the day. And then the other thing that I would have through my website, I'll publish this information later on. So I would actually give you the ability to make an appointment with me. And if you don't want to go through the process of going through the videos, you'll actually be able to, we would have set up a meeting for about an hour. I'll talk to you about the things that have worked for me in the past, how I go about tracking my income and expenses. And this method that I've developed over 2 years, you can actually learn it in an hour. So that way, as you're starting your side hustle, you don't have to go through all the process that I went for the past 2 years learning these things, but you're already starting at an advantage. And then on top of that, whatever money you'd use, be it for your course or be it for making an appointment for me, you can claim it as a business expense at the end of the day. So there's only so much I can talk about, but stay tuned. I'll be coming up with more exciting information with regards to this. So just let me know what you've also worked for you when you're doing your expenses. Just let me in the comments. And if you like the content that I'm bringing, just hit the subscribe video and stay tuned to all the things that are coming up. So till next time, thank you very much.